Well, look, obviously wanted to draw to light as well. You've obviously just had a raise, so massive congratulations to the
Thanks.
business. I'm sure that took a lot of time to get that moving. So I guess in terms of, you know, with that raise, it's obviously not been easy for a lot of startups out there looking for funding this past year. So what would your advice be to other companies, looking for new capital and navigating that process?
Yeah, I think my first piece of advice, I've got a lot of advice. I'll try and be brief. My first piece of advice is be honest with yourself and know that it's not going to be easy, because it's not. And I think I would challenge a lot of startups to really question, is venture capital the route that they even want to take? Because it can be really enticing. There's a
Much
lot
debate
of
at the moment.
capital, there's a lot of money, a lot
Yeah,
of growth. It's very exciting, but the reality is only the smallest segment of businesses are able to earn capital or raise capital. And honestly, the same small segment of businesses, they're the ones that should be raising capital and growing at that length. You can build incredible businesses and sustainable businesses without raising venture capital. So my first piece of advice is just to identify, like, is that the route you want to take? Because admittedly, there are a lot of concessions you as a founder have to make along the way as well. I would say more tactically, some advice I could give is, if you're pre-revenue, I can only speak, we just raised our seed round. This is early days, and capital raising at different stages is very, very different experience. But on the early pre-seed seed side, because of the market correction and the volatility that's happened over the last 18 months, I would say if you're pre-revenue, understand that it's going to be very difficult. So many funds, even the earliest stage funds, have sort of pushed the needle to de-risk it for themselves and are looking to optimize for companies that are a bit further ahead, have real traction. So if you are pre-revenue, stay pre-revenue and raise on the idea. I think some learnings from our previous business and other founders I know is, it can be really, as a founder, you want to start earning money and become a business as quickly as possible. But the second you are post revenue, you're going to be benchmarked based on how much money you're making as a company, how much that graph is, going up and to the right.
right.
So you just have to be tactical when you actually decide to raise and really, compartmentalize that, because you can end up in sort of chasing your tail, where if you start making money, then, the investors are like, looks great, make more. And, maybe it's going to take a little longer for you to actually get to those expectations. So you just have to be really pragmatic of when you go out to raise. With that as well, I think you have to sort of step back and understand the psychology of investors, what they're optimizing for. I will be the first to admit and be very transparent that I've had a lot of pride going into fundraising, and when I didn't get the answers that I was looking for or the feedback that I wanted from investors, I sort of balked at it, and I was like, well, what do you know? But the reality is investors have their own priorities and prerogatives, and that's totally fair and understandable, as frustrating as it can be as a founder. But they're optimizing to return the fund, return money to LPs. So you need to be able to fit into their mold more than they fit into your mold. That doesn't mean that they should not have conviction in your
Yeah,
business and understand your business, but you just have to sort of understand where they're coming from, because otherwise it can feel like you're banging your head against the wall. And I think it's
definitely.
really important to build relationships with these investors as well, because they're going to be close with you, and you don't want somebody on your cap table who's not helping